Today, Bitcoin slips below $70,000 after failing to breach its all-time high this week. And the CEO of Borderless.xyz shares his outlook for crypto post-election and into 2025. Welcome to CNBC's Crypto World. I'm Tanea McKeel. Major cryptocurrencies dipping this morning after the latest jobs data fell well short of expectations after the labor market was hampered by hurricanes and strikes. The U.S. added just 12,000 jobs in October compared to the 100,000 that Wall Street was expecting. Although the unemployment rate remained unchanged, this data does come just days before the U.S. presidential election and the next Fed meeting. By noon Eastern, Bitcoin slumped below the $70,000 mark, dropping about 1.7%. Ether fell about 2.4% and slipped below $2,500. XRP climbed higher to 52 cents. If we look out at the week, Bitcoin and Ether are both up about 4.1 and 1.3% respectively. That comes after Bitcoin came within striking distance of its all-time high earlier this week. And if we look out at the month of October, Bitcoin rose more than 12% in the first month of the fourth quarter, while Ether gained just half of 1% in that time. All right, let's stick with markets for our main story. I spoke with Kevin Lehtiniitty, CEO of Borderless.xyz, about crypto's October performance, his outlook for the election's effect on prices, and the setup for 2025. Kevin, thank you so much for joining us on Crypto World today. We are at the beginning of a new month, just finished October up 12%. Wondering what you make of the way crypto fared in October and what your outlook is for the next month.
I think October was a extremely bullish month for crypto all around. We had Bitcoin rallying towards the end to some numbers we haven't seen in a while. We had big major companies like Visa and PayPal announcing crypto initiatives around stablecoins. We had some M&A activity around stablecoins as well, with Stripe announcing their biggest acquisition ever. So I think definitely heading into the election that's coming, very, very bullish sentiments in the crypto market all around.
And what does the crypto market look like to you through that election lens? I mean, we've been talking about it all year, the entire crypto community, and it really does feel like emotions have kind of ebbed and flowed. Like initially there were some strong reactions to either candidate, and that has kind of gone up and down as the election cycle has played out. And maybe we can get into, the candidates and the government in a second, but just looking at the markets and the direction and the performance, it's 5 days away. How do you see it impacting prices and the market action in the next few weeks?
I think the market is excited that the current administration is coming to an end one way or another. Both candidates have been kind of pandering to the crypto vote, especially most recently, and trying to set a very clear narrative in the market that under either of the potential new administrations, crypto isn't going to go through this kind of systematic persecution and this regulation by enforcement that's been happening the past 4 years, and all these wealth notices and things that have been issued. So I think a lot of optimism either way.
What exactly is at stake for crypto this election? Because sometimes it feels like we're all talking about very different things. In my job, I'm very focused on the markets and the price of Bitcoin and the price of Ether, but there is so much more to the crypto space than just that. So, tell me a little bit about what has been fueling all of this and what exactly is at stake, some best and worst case scenarios.
And crypto assets are certainly an important part of the crypto markets when we think about Bitcoin and price action there. But there's other use cases as well, especially around payments and what's becoming really popular now with stablecoins. I think the world is starting to wake up that a blockchain can be used not just as a speculative asset where people are speculating on price, but also as a way to make payments and to move value and transfer value around the world.
And what is the outlook for stablecoins look like from where you sit? Because that's kind of the world you live in, right? A lot of focus on stablecoins at Borderless. And so, with or without the election lens, it has been a really good year for the stablecoin market cap. And we have been seeing all of these people, even just in the last few weeks, come out with announcements about it. It just feels like everybody's launching a stablecoin right now. where is that going from here? How could the election affect that? And then talk about the setup more broadly going into 2025.
I think in general, and this is certainly a world that kind of I live in every day and that we live in every day with Borderless.xyz. But a lot of the partners that we work with over the past year or two have moved out of the US. I think if you look at kind of before this administration, there was a significant amount of stablecoin innovation that was coming out of the US and that was coming out of Silicon Valley and this traditional technology innovation hub that we're fortunate to have here. And that's certainly not all gone. And there's certainly a lot of things happening still in the US. PayPal announced their new stablecoin. Stripe acquired their acquisition of a platform called Bridge. Visa is doing some things on helping banks issue stablecoins. But I would say there's been a significant trend on companies moving into London and moving into the EU where there's really clear regulations. We can debate the merits and the points of a lot of the regulation they've come out with, but at least there's a clear rule book to play by versus here in the US where the SEC's position has been, hey, come in and talk to us and register, but there's no path for registration and they're just really regulating by enforcement with their Wells notices.
What needs to happen to bring some of that business back to the US, not even just to move it, but to, start to have a bigger presence here in the US, whatever happens with the election and, call it the handful of months that follow, probably isn't going to do it. So, the outcome is going to be whatever it is, but what is it that that crypto businesses need to see to decide that they want to start to have a bigger presence in the US finally?
Okay, I think all we need, and it sounds so simple, is clear regulation. Coinbase has been kind of leading the charge along with quite a few others and asking for this for years. And it's not that crypto companies are looking to play outside the rules or are looking to skirt regulation. Crypto companies are the ones who are the most active and the most vocal, asking for clear regulations that they can play by the rules. And the current administration has just refused to provide that and has gone a step further in some of the research that Nick Carter has published recently on how the Fed and how the current administration actually systematically dismantled Silvergate Bank, as an example, which is a publicly traded company and was banking a lot of the crypto companies, and this Operation Choke Point kind of cutting access to banks. And that's had tremendous impact, not just to the crypto markets, but to the everyday American consumers. Bank runs are not pleasant for anybody. And these weren't accidental. These were systemic.
Stablecoins have been a huge point of interest in Congress. Is there an outcome of this election, a unified or divided government? Is there a scenario where you see certainty that there will be progress on stablecoin legislation in 2025?
There's a great initiative out called Stand with Crypto that's done a really good job of making digestible the kind of crypto stances of all these different politicians. I think there's still a long road to go, regardless of how the election goes. You still have the House, you still have the Senate, you still have kind of local regulations. Money transmitter licenses in the US are regulated on a state-by-state basis, certainly influenced by the federal government. But it's not just the president, is I guess the point that I'm making. There's a lot of other politicians and there's a lot of other regulators at play. And quite frankly, the US is now behind on the geopolitical stage when it comes to stablecoin and crypto innovation. And that's not something that gets fixed in a few months. That's something that's going to take a concerted effort of a government that can hopefully work together across party lines to bring back the ability for our economy to grow and to be a world leader in this new generation of technology.
Well, obviously, everything is about the election right now, but we also have a Fed meeting next week. And I do want to talk a little bit about rates with you because while the sentiment feels generally optimistic that we are closing sort of a dark chapter because of the lack of regulatory clarity, about to start something fresh, but we are into this rate cutting cycle now. And, we know that could pose some challenges for stablecoin issuers who make a lot of their revenue on that interest. Can you talk a little bit about that and how you see, the next few months ahead with the rate cutting cycle impacting stablecoin issuers?
That's exactly right. For the vast majority of stablecoins, the bulk of their revenue, if not 100% of their revenue, comes from the yield of the underlying USD that's being tokenized. And sure, there's stablecoins that exist in other currencies, but if you look at the market caps, the dollar is still the world's global currency. And therefore, stablecoins that are dollar denominated are driving a lot of the general stablecoin adoption. And as rates begin to fall, that starts to have a really material impact on the revenue that stablecoin issuers are able to get, whether that be Circle or Tether or some of these newer stablecoins that are actually interest-bearing stablecoins that are coming out of BlackRock and Templeton and these tokenized money market funds. It's going to impact everybody across the board. And maybe we'll see new fees, maybe we'll see a little bit less adoption, but we still feel very strongly that stablecoins are the best proxy for US dollars globally, especially in emerging markets that can't get their hands on dollars natively.
Okay, that's all for Crypto World this week. We'll be back again on Monday, and we'll see you then.